Welcome to Magellan Minutes. My name is Alyssa DeMarco, Investment Director and Analyst at Magellan. And today I'm joined by Adrian Lu, Investment Analyst within our tech team. Welcome, Adrian. In today's discussion, we're going to be talking about the semiconductor industry, looking at the attractive tailwinds and growth opportunities, as well as our high conviction pick in TSMC. So Adrian, semiconductors is an industry that you specialise in, and it's something that you've spoken to our audience several times about. But just as a reminder, semiconductors power everything electronic that we're using on a day-to-day basis. That ranges from the basic kettle that you have in your kitchen to the electronics in your car and also the software on your smartphone.
That's right, Alyssa. They really are the building blocks of technology, and they're so pervasive across so many industries.
Yeah, so with this backdrop, it's no surprise that the semiconductor industry has been growing rapidly in recent years and now makes up around 9% of the market. What's your view on the industry on a forward-looking basis?
Alyssa, the future for semiconductors looks as bright as ever. We think that growth in semiconductors is going to continue to be strong over the years to come. And the reason for that is simply that our rate of technology adoption is just going to continue to rise rapidly, which is really just another way of saying that we're going to use more and more of it. I mean, you just have to look across the many growth dynamics we see across the space, from artificial intelligence to robotics to autonomous vehicles to cloud compute to edge compute and so on and so forth. All of this requires chips to run on. And the thing is, no matter which of these growth dynamics you may favor as an individual investor, one thing you can bet on is that all of this is going to require more chip supply to sustain. And so that's a beauty of investing in this space. Now, not only is our demand or our reliance on technology rising, but so too will the reliance of these technologies on chips. And just to give you a good example of that, if you take the electric vehicle, for instance, the amount of, or let's say the dollar amount of chip content in an electric vehicle today, let's call it $1,500 or so. That's already twice the value of the content you would find in a modern combustion engine vehicle. So even if you were to sell the same number of cars, even if the car industry wasn't to grow, you've already doubled the market opportunity for semiconductors just on that electrification thematic alone. And that's before I've even laid in vehicle autonomy and the array of sensors and vision and controllers that it pulls in, all of which rely on a ton of semiconductors, which would make that number even greater. And so the industry is currently predicting that global spending on semiconductors is going to reach $1 trillion in 2030. But I suspect the way things are going at the moment, we could well surpass that number, notwithstanding cyclicality and any bumps we might encounter along that road.
Thanks, Adrian. That's quite the scene and quite the opportunity that we have in front of us with respect to the semiconductor industry. One thing that I'd like to touch on now is artificial intelligence. There's a strong link between the demand for semiconductors and developments within the artificial intelligence industry. Now, earlier this year, we saw news come out about DeepSeek and the amount of compute power that is needed to drive their technology. Can you talk to us a little bit more about that and how that may impact the industry outlook?
Yeah, that's a great question, Alyssa. And the thing about DeepSeek is they really made a lot of waves when they released their latest AI models in January this year. Not so much because they had produced something that had suddenly surpassed the state of the art, or that they had leapfrogged Google or OpenAI, but because they had produced something that was pretty close to the state of the art, but at a much lower cost. And that stoked market fears because it made us, made the market ask, hey, do we really need to spend as much on GPUs as we thought we did? Now, we can have a debate around whether it was really as cheap to build these models as DeepSeek claims it was, but I think that's beside the point, because what there's no denying is this company came up with some genuinely clever techniques and methods that made it cheaper to build these models, to refine these models, and to run these models. Having said that, I do think that this was made out to be a bigger deal than it was. We've been very close observers and followers of AI progress, and this was not some sudden pivotal moment. AI models have been already going down this path of becoming more efficient, more lightweight, cheaper to run, and just generally more effective. And so, not to take away anything from DeepSeek, because what they did was genuinely impressive and innovative, but to us, this was just a continuation down this trend of greater efficiency, which is actually one of the primary reasons we've been more cautious about the strong levels of GPU spend that we've been observing in the market. What I was actually interested, or what I found interesting, was actually the market's delayed reaction to the DeepSeek developments, because DeepSeek's original V3 paper was published in December, and its follow-on R1 paper was published in January, a full week before we even saw the market react.
Thanks, Adrian. That's been really interesting scene setting with respect to the industry and the long-term demand for the usage of semiconductors. With our final minutes here, let's talk about the stocks, the companies that are going to be benefiting from this long-term tailwind of semiconductor adoption. TSMC is one of our highest conviction picks within the sector. It's a stock that we've owned within our high conviction fund and global opportunities fund for around 2 years, and more recently within our global fund. Can you talk to us about TSMC and why you view it to be an attractive opportunity?
Sure. Well, the first thing I'll say is that semiconductors is such a broad and expansive sector, spanning everything from intellectual property to design software, right down to the semiconductor manufacturing equipment. TSMC plays a unique role within this value chain as the contract manufacturer of its customers' chip designs. Now, you can have many companies designing their own chips, but very few companies can actually go and manufacture them. And why is that? It's because the capital costs you require to establish your own semiconductor manufacturing capability is enormous. We're talking double-digit billions of US dollars just to build a single moderately sized fab today. And that's a number, by the way, that's continuing to rise quickly just because of the greater levels of sophistication we're building into these chips every single year. So if you're a company looking at advanced manufacturing, it almost never makes any sense for you to go out and build the chips yourself, because you simply can't justify the scale that's required to do so. And so if you can find someone, if you can find a partner who can manufacture those chips for you more quickly, more efficiently, and better than you could ever do, that's a win-win. And that someone happens to be TSMC. So much so, in fact, that TSMC has virtually now no competition for advanced manufacturing processes. It's literally become the only and the company that every single design company will partner with in the value chain. This is a tough game to be in, Alyssa, and TSMC is the one still standing. And so for all of the reasons that we're positive about semiconductors, I think TSMC is one of the most attractive ways to play this thematic. And if you think about it, virtually all the future most consequential innovations we're going to see coming down the pipe will most likely have to go through TSMC's fabs. So strong growth prospects, attractive valuation, and favorable growth dynamics makes it a top pick for me.
Thanks, Adrian, for your insights today, and thank you for joining in. Please feel free to share with colleagues and clients.